Got to start with markets, guys. Dow plunging 276 points, making this the worst start to any year since 2008. But at one point, we were off 467 points. That was at the session low. Now, we blame it all on China. Bad news out of there got us rolling off to a really ugly start out the gate. Where do we go from here? Well, we brought in the investment pros and economic pros, Hilary Kramer, Steve Moore, and Steve Cortes. Cortes, let me go to you first. The stock market really, last year, despite the fact we were off slightly on the Dow and S&P, there was a lot of carnage then. Is this an extension of that or something new?
You know, I think it is, Charles. And listen, I think, and you know, I've been skeptical lately, and I think there are reasons to be skeptical into the new year. The problem with 2015, and we finished basically unchanged on the year, but the problem is we were incredibly reliant on just a few names, some really high-flying tech momentum names. Well, today, to start the new year, those names, which are often referred to as the FANGs, Facebook, Amazon, Netflix, and Google Alphabet, those names got absolutely decimated today. So I think the FANGs have a cavity. Global growth is not good, and the world, unfortunately, does impact the United States. We're doing okay, but we can't decouple from the rest of the world.
Although you were kind of negative on FANG throughout 2015. I mean, it was a resilient trade all year long.
No, it was. It made a high, though, in November, and I've been particularly negative since then and in fact, short the FANGs. So I think from here, look, momentum stocks have led the march higher. It has not been the normal sort of prosaic type of winners that you want to see lead the market higher. So I urge caution here. And listen, I don't hate everything. We're going to talk about some of the picks we like. I think there are some bargains, but in general, I think it's a time to be cautious.
Steve Moore, let's talk about the economic side of this. You know, how important is it that China somehow continue to be the straw that stirs the drink? We know that they can't keep building ghost cities, and at some point, maybe the U.S. has to pull its own weight.
Well, it has been the straw that stirs the drink for, what, 15 or 20 years, because it's had, what, 10 to 12% compounded rates of growth. And now, Charles, you know, according to who you want to believe about the China statistics, and they're, you know, sometimes not believable, but somewhere their growth rate has slowed to, you know, 2 to 4%. So it feels like a recession in China based on what they've had. I'd make a couple of points about why China is slowing down. One is simply that the manufacturing and output has just slowed very considerably, especially in the last 3 months. And that's really caused a great fright around the world in terms of stocks. But I want to make another point. China did something really stupid that they learned from the United States, Charles, which they have these capital controls, these circuit breakers on the market. And that I believe contributes to the kind of panic selling, because if you tell somebody, you know, it's like having depositors at a bank and you tell them you can't pull out your money, that causes people to start, you know, really panicking. And I think that created this negative market, or at least contributed to it.
A self-fulfilling event. You know, and just so the audience understands, today was the very first day China puts in these circuit breakers. They go off at 7%. Guess what? They go down 7%. They don't know what to do. They close up the market. Everyone goes home. So we don't know what kind of pent-up selling we may have in store for us overnight in China. Hilary.
Gambling and corruption. That's the problem in China, and they're starting to really feel it.
So should our stock market crash because of their gambling and corruption problems?
No, it shouldn't, and that's the really good news for us, and that's why we saw some stocks today that were very U.S.-centric, stocks like Kohl's, for example, KSS, that was very resilient for us.
I want to ask you about what you think the downside. Let's just talk about a worst-case scenario. I see 16,900 as a must-hold support point, or we could drop another 1,000 points. What do you see a worst-case scenario coming out the gate?
We could be down 2.5% to 3%, but I could see us very quickly coming back from that, because there is lots of buying that needs to be done. We're at the beginning of a new year, new quarter. There's lots of money out there, and many money managers are going to be out there looking for so many bargains that are across the board.
Although, Steve Cortes, you know, you make the point earlier that it wasn't about bargains last year. It was about chasing momentum names. We've heard that a lot of money's been on the sidelines since March of 2009 rather. So first of all, what would be your worst case scenario? Because you tend to be more bearish than a lot of other guys who come on the show. And what would turn it around?
Right. Charles, I think at least 10% downside is possible here. Look, last year we struggled to make any gains at all, depending on which index you looked at. And by the way, China, it's not that China matters that much to the United States in and of itself. It's that China matters so much to global commodities, and commodities do matter to the United States. Thankfully, we're Saudi America. Long term, that's a great story. But near term, we have a problem now. We don't like oil in the 30s all of a sudden, and China is the one fortunate there. So I think that we have to be very careful going forward. But in terms of a catalyst for the upside, too, which I think will eventually happen, I'll tell you this. I think it's going to be a Republican win in 2016. We need deregulation. If that happens, I think the U.S. economy absolutely catapults higher.
I think Charles, I think one of the big problems with the economy right now worldwide is a leadership problem. I mean, where is the leadership coming from? It's not coming from China. It's not coming from America. You don't see many leaders in Europe. I mean, the leaders around the world have been talking about climate change, not how to get people out of poverty and get growth going again. And look, if Steve is right, if we see a Republican win in 2016 and you get a pro-business president, yeah, the upside of this market is huge. But I see it just sort of flat this year until we have some kind of resolution on this. When you got Hilary Clinton, who you might say is the most likely person to be the next president, who's running around talking about raising capital gains taxes and redistribution, no growth message, that's a big problem.
Steve Moore, if the tea leaves, though, in mid-year seem like indeed it won't be Hillary Clinton, but the GOP nominee, do you think businesses will go out on a limb? They've been sitting on this money for a long time and start to make the kind of capital investments that you've told me in the past are the key to real prosperity in this country?
This is the bit you put your finger on the problem. What's wrong with the American economy? It's businesses are not investing at the normal rate that they would. They should be investing at about twice the rate they are. Why aren't they? Because they're afraid of Washington. If we can see that cloud of fear dissipate due to political changes, I think you see one of the biggest booms you ever saw in this country. But it is going to require a change of regime. It simply is. And I don't see that lifting until we know who the next president is going to be.